Right now, we're going to rip up the script. We can do this with William Lee. He is chief economist at Milken Institute. We are going to talk to him about the empire statistics, but said, let's take advantage of his encyclopedic knowledge of the Pacific Rim and the dynamics of China. Of course, Dr. Lee has all of the efforts he's done at the International Monetary Fund over the years and Citigroup, and of course, holds a shingle out at the Milken Institute right now. Billy, I want to go to the party Congress right now. Elizabeth Economy of the Council on Foreign Relations, in her beautiful book, The World According to China, has the view of China looking out. How does Beijing and their leader in Beijing, how does he look within, giving the grim data of the day?
Actually, President Xi has made a major campaign of his to start looking inward. It's called the dual circulation strategy, where he wants to have the domestic economy become the primary focus for China and the source of growth going forward. Unfortunately, so much has collapsed within China that the domestic economy is nowhere to be found, especially in the private sector, where the only store of wealth the middle class had, the property sector, has completely collapsed. We've had about a year of declining real estate prices. So right now, the rest of the world is the only hope for China, and even that's collapsed because the latest data show the export numbers are nowhere to be found. So China really has nothing to hang on to going into the party Congress.
How does Xi, Bill Lee, prosecute decisions, logistics, the process of it to Shanghai or to Chengdu? How does Beijing actually get the message out?
You know, right now there's a tension between the central government and the municipal governments. Because right now, the only place for revival is to have the municipal governments go in there and do infrastructure building and just start pumping out fiscal policy. Unfortunately, every municipality out there is so indebted they can't do it. And so the only thing that Xi Jinping has to have to save face going into the Party Congress in October is to have some prayer of saying we will have a revival in the second half of the year. These numbers today have put that to rest, and there's no chance for that. On top of that, Speaker Pelosi has slapped him in the face, and the loss of face going into the Party Congress is going to be something that's going to be very hard for him to recover from.
But we'll get to Taiwan in a moment. Just on the economy, are you describing a balance sheet recession in China?
A balance sheet recession for sure in the private sector, because the only source of saving for the households has been real estate and a very volatile stock market. And so with the collapse of the real estate market and the huge youth unemployment, it's very hard for households to have a positive outlook for the future and start buying things like consumer durables and other items. So the balance sheet recession notion is very much in play in China.
And that leaves monetary policy impotent, doesn't it? And Bill, if that's the case, I'm just trying to work out where that leaves the global economy off the back of these dynamics starting to bubble to the surface just a little bit more.
The only place monetary policy can have a play here would be regulatory policy, to somehow ignore all of the holes that are in the real estate sector and say, okay, guys, go on and build. We're going to backstop all of your bad debt and all of those empty apartments of yours. That's the only place for monetary policy right now, is the regulatory side. And China's not going to be able to do that because the regulatory sector, the real estate sector is in such bad shape.
So what are we looking at, Bill, in terms of GDP growth for China?
I hear two handles going into the rest of the year. And so in order for China to get to its 5.5% target, it has to have 7 or 8% for the rest of the year. And right now, it's exactly going the opposite direction.
Has the rest of the world economy factored that in, the likelihood in your idea that you could see a two-handle for Chinese GDP growth?
I think that notion has gotten out, especially among my friends who are China chief economists out there. They can't publish it because they'd be banned from China. But I think the notion is among the investors of the world, well, this may be temporary, and China will somehow recover because it always has. But the structural problems I just pointed out are just so severe. I think there's going to be a lot more work to be done for China to regain anywhere near its investor status.
What about the asset pricing, though, globally? And we're just talking about the Empire Manufacturing Survey, severely disappointed. Second biggest drop in this history of this index, the second biggest just all-in level that we have ever seen in this index's history. How much are we looking at a global recession really pitting off the slowdown in China?
Well, manufacturing is really at the core of the globalization. That's the one sector that's most affected by globalization, and China in particular, because it's been the nexus of manufacturing. So we would expect any kind of slowdown in China that affects the global supply chain to kill the manufacturing sector before anything else, and we are seeing that in the data now. So that's not so surprising. What is going to be difficult would be how the rest of the global economy will adapt its global supply chains in a way that it takes China out of the picture, or at least become less important part of the picture.
Bill, you said something moments ago. I'll paraphrase that certain people can't publish things because they'll be thrown out of the country. Now, Bill, there's an element of truth in that, in the minds of a lot of people. And I wonder if these things start to deteriorate just a little bit more, Bill, where I look for reliable data on what's actually happening in that economy.
Well, I hate to say this, but my sell-side colleagues are kind of constrained. I'm lucky to be at Milken, where I'm not constrained to say what I think. And I think it's going to be very difficult to find hard intelligence about China outside of private sources.
That's tough. Bill, thank you. Bill Lee of the Milken Institute. TK, that's what we've got to confront. These dynamics, these issues that we're talking about right now, Tom, are things that we typically associate with a balance sheet recession, which is what Bill's talking about in the Chinese economy.
Yeah, it can be a balance sheet recession, but I think it's so unique, and you see it with the information flow there, the lack of clarity on data as well, that I'm in the camp, John, it's more than just an economic analysis. It's a unique time. I don't have any ability to predict it other than to say I can see the three of us traveling to Shanghai in November to cover the party Congress.
Are we going to be able to talk about what's happening in that economy? Do you hear what Bill Lee just said there? That he doesn't expect to get the real insight from his South Side colleagues.
No, that's been known for years. And
sure, but how problematic is that as we confront some real issues in that economy?
I think that Dr. Lee is speaking the reality that is unspoken by anyone on global Wall Street that's experienced. John, I personally experienced it numerous times in China.
There's a larger question here, though, which is our economists that are looking at the U.S. manufacturing, that are looking at the U.S. factories, the U.S. Retailers factoring in a 2-point-something GDP for China. How do you then factor that in? And if that's the case, are oil prices reflecting something that other risk assets are not yet because of the slowdown in demand? And that, I think, is a bigger sort of question for markets.
Empire manufacturing was brutal, wasn't it? Good to catch up with Mike McKee off the back of that. I can tell you off the back of it, futures still lower.